Good evening, everybody. Hope everybody's having a pleasant summer evening. Tonight we've got the great pleasure of having A.J. Brown with us. As you saw in a little bit of his bio, he has traded very successfully with options. So not only is he a successful option trader, but he's got a very good teaching program that shows other people how to do it. So with that, AJ, welcome to the Candlestick Forum. We're anxious to see your information tonight.
Oh, wow. What a wonderful and welcoming introduction. Quick note, all the folks that are part of my programs, when they need the inside scoop on how to read price and volume charts to really know what's going to happen next, for years now, I've been sending them over the Candlestick Forum and Mr. Bigelow. And I have to say that they find a good home there. You guys are in great hands, and I am so thankful I have been invited to speak tonight. And I am A.J. Brown, and I am with Trading Trainers, Instant Income Calendars, How to Generate a Serious Income Selling Options, The Secrets from a Trading Pro. This is one of my favorite presentations to give. This presentation allows us to really understand not only how to make money when the market goes up, but especially when it goes sideways and even when it goes down. Now, a couple of housekeeping rules. In this webinar software platform, there is a place where you can chat your questions in and also interact with me, and I like that. Studies have shown that folks who interact during a webinar and not just watch and listen, they get more out of it. Plus, I have the honor of having Coach Jay here from Trading Trainer sitting next to me. And Coach Jay, while I'm giving the main presentation, will be in the chat room with us answering your questions as they come up. So please, 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 and he'll also give to me any sort of questions that need to be addressed at the end. But please feel free to interact with me. In fact, let's test it right now. Please type a yes. Please type a no. Please type a hello to Coach Jay. All right. Let's begin. Before we go on any further, of course, we have our government-mandated disclaimer, which is information, charts, or examples contained in this presentation are for illustration and educational purposes only. They should not be considered advice or any endorsement to purchase or sell any security or financial instrument. We do not and cannot give any kind of financial advice. No employee or persons associated with us here at Trading Trainer are registered or authorized to give financial advice. We do not trade on anyone's behalf, and we do not recommend or receive any payments from any broker. Whew. Now to move on to the real part of the presentation. The first thing I'd like to do is introduce myself. Hi, my name is A.J. Brown, founder of Trading Trainer, and I'm widely recognized as the world's most disciplined options trader. Now, that's another name for really the most laziest option trader. I've been given that nickname too, and that's because I get the most profit and the least risk by putting in the least amount of time, least amount of effort, least amount of mental anguish, least amount of money. So I'm a very, what I call efficient, because that's the engineering scientific definition of efficiency. I'm the most efficient trader, which some people recognize as the world's most disciplined and others recognize as the world's laziest. So you'll hear both. Now, really quick, with a show of hands, how many of you with a show of hands have heard of me before? All right, all right. And let me put your hands down. How many of you with a show of hands have not heard of me? Oh, good. There's a bunch of you that are new to me. That's fantastic. All right. Well, let me tell you a little bit more. I've been actively trading equities and options since the 1990s, and I've published daily insights for my Trading Trainer program participants every single night, 5 days a week since 2002. I'm also the author of the wildly successful ebook called The 7 Strategies of Successful Option Traders, and my home study course can be found on the shelves of the most successful investors, and oftentimes is referred to them by as their secret weapon. One of the things I pride myself most on, especially these days in my mid-40s, is that I'm a practitioner of accelerated learning techniques. This is the discipline that focuses on conveying information to people at a fast rate and having it stick. See, that's a complicated way of saying that I make it possible for people from all walks of life to quickly and competently learn how to invest and even trade their investment dollars for some out-of-this-world profits. Every day I compete with the sharpest minds in the most cutthroat business in the world. It's called options trading. And month after month, year after year, for over 2 decades now, I have come out ahead. In fact, not just a little ahead, way ahead. So much so that for many years now, investors and traders alike have sought me out to try and get me to reveal my secrets. And the truth be told, I don't really have any secrets. In fact, I don't envision myself as anything at all special. I'm an average Joe, just like most of you. I'm a learner, just like you. A little background on me. I've got a degree in mechanical engineering, focused on automatic controls. That's the marrying of electrical and mechanical engineering. It's like fly-by-wire systems, cruise control systems, and a lot of the systems that make it possible for us to do things today and not get hurt with it. I've also got a strong background in commercial business and investing, and with all these degrees that I got from higher education, both master's and bachelor's degrees, I'll have to be honest with you, when I left college, I did none of it. I wound up starting my own companies, pretty successful companies at that. And after many years of doing that, they got purchased out, and I wound up at a company called Hewlett-Packard, which I worked at for far too many years, too many I'd like to admit to, but it did give me the luxury, both in having disposable income and in having disposable time, to be completely honest, working in Cube City. I had all this time in order to learn how to invest and how to trade. And I have to be honest, when I started out, I lost big. I started out by spending $27,000 on going to weekend seminars in hotels that first year. Much more after that. And to add insult to injury, I also that first year gave $85,000 back to the market, trying out all the stuff that I thought I learned. Whew! It was more than my college education had cost. But it was a college education on its own, I have to admit now, looking back. And it turned out working at this for a very long time within groups of like-minded investors, going to these weekend seminars, mentoring me, allowing me to learn who was for real and who was not. That's actually what got me to where I am today, because I've been doing this for a long time. I've spent a long time, and I have now a lot of experience. And I have the luxury of spending large chunks of my time subscribing to and buying every educational program available and thoroughly digesting them, vetting them, and pulling out any tidbits of valuable information I can from them. All of this boils down to a great, big, fat benefit to you. And you want to know the honest truth? I have found that a majority of programs I get my hands on, especially today, they aren't worth the paper they're printed on or the cloud space they're stored on. Maybe you've heard of this, or maybe you've even had the same experience. See, over the last 20 years, I've learned who's on the up and up and who to pass by when they offer investing and trading advice. Because of my experience and my exposure to everything out there, I've been told one of my strengths is getting you from point A to point B in a straight line through what I call guided discovery versus the sifting through all the crap that's out there. The last thing I'd like to share with you is my biggest claim to fame, and that's working with inner city gangbangers. In fact, I've started a foundation helping teens learn about money and investing. In fact, have you heard of my Investing Turtles experiment? If not, this is where I took 14 teenagers off of the streets, taught them about investing and trading, and they wound up really turning their lives around. And I even gave them some seed money to start investing with. And sure enough, I thought I could kiss that money to the wind. They wound up, all of them, paying me back. 2 of them wound up paying themselves through college. They all wound up buying their own personal computers. Can you believe this? They were doing their investing at the local library on only 1 hour of internet time per day. And so this is my big claim to fame, because if I can work with these folks, I could surely work with any of you. Okay, enough about me. It's time for us to get to the meat of this webinar. Let's talk about investments. The investments I want to share with you today are less subject to wild swings or devastating losses. These investments can be immune to downturns in the stock markets. And we've been seeing quite a few of those lately, haven't we? These investments can even be structured to profit from those same downturns in the stock market. Can you imagine? In fact, every position you take has what I call a built-in profit buffer. This protects you. This profit buffer can be anywhere from 15 to 50% of your risk. So a stock can plunge by as much as half, and you'll still be breaking even. This profit buffer can be structured upside down as well. That means having the stock plummet turns out to be happy days for us. And when you tally up all our profits and losses, you could potentially earn 6% or more per month on average for your portfolio. Our program participants right now have been earning in the double digits every month on their portfolio, not just on individual investments. Now, that might not sound like very much to you, especially when every trading guru and his mother is promising you, like 1,000% returns. It certainly won't make you Warren Buffett overnight, but over time, the results are absolutely astounding. In fact, to show you what I mean, let's do a little thought experiment. It starts with a simple question. Would you rather accept $50,000 today or have a penny that doubles every day for a month? A lot of people would take the $50,000. It's a nice lump sum. I'm sure having $50,000 in your bank account right now would solve a lot of problems. Most amateur investors would take it, but I wouldn't. In fact, professional traders would take the penny every time. Why? Because while after 2 days it's only 2 cents, and after 3 days it's still only 4 cents, after 4 days it's just 8 cents, but if we keep doubling day after day, at 10 days we've got $5.12. Now we're getting somewhere. At 15 days, we've got $163.84. At 20 days, well, we've got $5,242.88. Now it's starting to look like real money. At just 24 days, a little over 3 weeks, we're at $83,886.08. We've finally overtaken the $50,000 lump sum payment. At 25 days, we've got $167,772.16. Unless you live in Manhattan or San Francisco, that's enough to buy a house. By day 28, we're at $1,342,177.28, which means you're now a bona fide millionaire. And by the end of day 31, at the end of the month, we're at $21,474,836.48. Einstein once said that compound interest is the most powerful force in the universe. Now, not sure if Albert Einstein actually said that, but we like to attribute it to him. Of course, you can't double your money every day. But if you focus and attain 6% every month, your investment will more than double every year. That's the magic of 6% per month. If you compound monthly 6% returns, your portfolio will double every year. Let me emphasize that one more time. If you earn 6% on your portfolio every month or more, but 6% on your money every month, your investment will more than double every year if you allow it to compound monthly. That means if we have $1,000 in 12 months at 6% per month, $2,012. In 2 years, $4,048. 5 years, we're talking $32,987. And in 10 years, you're a millionaire. $1,088,187. This is the golden goose that lays the golden egg. Because if you had a $1,000 portfolio, allowed your portfolio to grow that high, you could start taking an income. This is where we get our six-figure income. Every year, $101,219.65 per year. That's more than most high-paying jobs in the United States pay. And the beautiful part is you don't have to put in 60 hours a week. You don't have to have the nagging that goes on. And if you don't use that much per year, you allow it to let your golden egg grow even bigger. So what are we actually investing in? We're investing in selling option premium. Now, there's so many ways to sell option premium. Let me ask right here, how many with a show of hands have ever sold derivative premium before in the past? Okay, there's a few of you. Let me put your hands down. How many with the show of hands, please get on your virtual hand raising, selling option premium is something you've not done? All right, there's quite a few of you. Selling option premium. And there's so many ways to do it, but we focus on not only the easiest ways, but the ways that we can adjust and make lucrative in every situation possible. But let me go into a little detail. Like, what is this option premium? Well, an options price is equal to two different components. So when you look up an option price, either going to the CBOE exchange and looking on the big board there or any of the other exchanges that are now carrying options, every option price you look at is actually composed of the in-the-money value and the premium value. And we're focusing on that premium value. But again, that option price is equal to the in-the-money value plus that premium value. The in-the-money value is that value of the option when it expires. The premium value, it's the emotional value that decays away with time. But you might be saying, wait. What are these options? It's a financial instrument called a derivative. They're bought and sold to hedge risk against stocks, indexes, and even exchange-traded funds. But that's not how we use them. We sell the premium. In fact, we focus on 4 simple transactions: writing covered calls and writing covered puts. And we love to write that covered put. I'm going to stop right there and talk about that a moment. We love to write the covered put because it flips the covered call upside down. When we fear the market is going to break out to the downside, writing a covered put is potentially right where it's at, because covered puts have the unlimited reward, or the reward to the downside. So keep that in mind, because everybody's always thinking covered calls, covered puts. We also like to write covered calls against leaps, supercharged covered call writing. We use deep in the money, far out in time calls. We also take those same covered puts and we write them against leaps. Deep in the money, far out in time put options are our back month. They're supercharged covered put writing. Think about it. Lower our cost basis, increase our reward. These are the 4 simple transactions we focus on. Let me take a moment and run through an example of what I'm talking about. You buy a stock. Let's pick Amazon. At the time we recorded this video, it was trading at $1,416.78. The June 15th $1,420 call option is trading for $121.75 per share. You'd buy the stock and sell the call option. You earn a $12,175 instant dividend, and you own the stock. Just like our hypothetical real estate deal, we've got 3 potential outcomes. If Amazon closes above $1,420 on June 15th, your stock position gets called out of the market for $1,420 per share. You earn a $3.22 profit on the stock. You earn $121.75 per share from the option premium. That's $124.97 in profit on a $1,295.03 investment for a 9.6% profit. This is our ideal scenario. If Amazon is flat by June 15th, you keep your stock position with no loss or gain. You earn $121.75 per share from the option premium. You've got an 8.6% profit on your position in a few months. And you can sell a fresh call option as soon as your existing one expires. Finally, if Amazon drops by June 15th, you have a loss on your stock position, just like with any investment. But you've also got your $121.75 per share option premium. It acts like a profit buffer against your losses. As long as Amazon closes above $1,295, you'll at least break even. So you can buy a stock and earn a profit even if it drops. Not bad, right? But what happens if Amazon drops even further? What if your profit buffer isn't big enough? At that point, you still have your stock position. You can go right ahead and sell another call option. And you can keep doing that until Amazon rebounds. With every option you sell, you bring your break-even price down a bit further. Of course, this trade is purely hypothetical. To give you a complete picture of how the instant income calendar works, let's walk through a real trade we took recently. On October 16th, we spotted an opportunity in Guess. At the time, it was trading at $15.90 per share. The $17 November 17 call was trading at 35 cents per share. We bought the stock and sold the call. We earned our instant dividend of $35 per contract. Just 22 trading days later, on November 17, guess was trading at $17.66. We had our position called out of the market for a profit of $1.10 per share. On each 100-share option contract, we earned $145 on a $1,555 of investment. In our case, we invested in 4 contracts. We earned $580 on $6,220 of investment. That's a 9.3% return in 22 trading days. This wasn't some random anomaly either. We've seen dozens of trades exactly like that one, like a 17% return on Micron in 12 days when the stock traded up, a 15% return on Activision in 34 days when the stock treaded water, and a 14% return on Allscripts Healthcare in 86 days when the stock dumped. Now, how many of you, with a show of hands, followed along with that example? Are you starting to see it? Well, let me show you a variation. We love to find trades like this one we had recently. On January 2nd, Micron was trading at $43 per share. That was a little rich for my blood. I decided to use one of our variants. I used the variant where we sell premium against the stock's leap instead of the stock itself. It lowers the cost of entry to get into this kind of investment. It's just one of our alternatives in the instant income calendar toolbox. On January 2nd, the Micron 2019 $20 strike price leap was trading at $22.50 per share. The 46 January call was trading at $2 per share. We bought the leap and sold the call. We earned our instant dividend of $200 per contract, or $800 overall on our 4 contracts. Just 25 trading days later, on February 6th, Micron was trading at $44. The Micron 2019 $20 strike price leap was trading at $24. We had our position expire worthless. And if we liquidated our position, we'd get our $24. And on each 100-share option contract, we would have earned $350 on a $2,050 investment. Because we traded 4 contracts, we earned $1,400 on a $8,200 investment. That's a 17.1% return in just 25 trading days. Now, as I mentioned in the last video, there is a way to juice up those profits. On this trade, we could have earned 630% on our risk, with a maximum risk of just 50 cents per share. Not infinite risk, but capped risk. You will be learning that strategy in this video. For now, just remember, we're targeting a 6% total account return per month. If we can hit that target, every $1,000 in your portfolio would become $2,012 in 12 months. It would be $4,048 in 2 years. After 5, it's $32,987. And after 10, you'd be looking at $1,088,187. With a $100,000 portfolio, you could potentially withdraw $101,219.65 in income per year. Did you follow along with that example? How many with show of hands followed along with that example? How many with show of hands need a little bit more? Okay, let's do it. Here's another example. So here's a real live example from our actual trade logs. We actually did trade NationStar Mortgage. On November 20, NationStar Mortgage was trading at $16.70 per share. The $18 December 15th call was trading at 80 cents per share. The $15 January 19th put was trading at 40 cents per share. We bought the stock, sold the call, and bought the put. We earned our instant dividend of $80 per contract, or $400 for the 5 contracts we traded. We paid $40 for our insurance policy per contract, or $200 for the 5 contracts we traded, capping our max loss at $1.30 per share. Just 18 trading days later, on December 15, NationStar Mortgage was trading at $18.20. We had our position called out of the market for a profit of $1.60 per share. We liquidated our put protection for an additional 15 cents per share, bringing our profit to $1.85 per share. On each 100-share option contract, we earned $185 on $130 of risk. For our overall position of 5 contracts, we earned $925 on $650 of risk. That's a 142% return on risk in 18 trading days, or 25 days total. Once again, our goal with these positions is to average 6% returns per month. When you can do that, every $1,000 in your portfolio becomes $2,012 in 12 months. It would potentially be $4,048 in 2 years. After 5, it's $32,987. And after 10, you'd potentially be looking at $1,088,187. Now that right there is absolutely fantastic. You see, the implied volatility that we have today, how many of you with the show of hands follow the VIX volatility index? This is the implied volatility of the S&P 500. All right, quite a few of you do. Let me put your hands down. How many of you with the show of hands do not follow the VIX? Okay, a fair number. Let me put your hands down. Now, the scoop is you should. This tells you the amount of fear in the overall market. And that fear comes from the fear in individual stocks, indexes, and ETFs. That raises our premium. We love that fear. And with that premium being as high as it is right now, we're able to purchase those collars, those protective puts and calls, if necessary, in order to adjust our trade. In fact, here's another example. On October 26th, Energy Transfer Equity was trading at $16.60 per share. The $18 November 17th call was trading at 50 cents per share. The $16 December 15th put was trading at 14 cents per share. We bought the stock, sold the call, and bought the put. We earned our instant dividend of $50 per contract, or $200 for our 4-contract position. We paid $14 per contract, or $56 for our insurance policy, capping our max loss at 24 cents per share. Just 15 trading days later, on November 17, Energy Transfer Equity was trading at $16.31. We had our call expire worthless for a profit of 36 cents per share. On each 100-share option contract, we earned $36 on $24 of risk. For our whole position of 4 contracts, we earned $144 on $96 of risk. That's a 150% return on risk in 15 trading days, 22 total days. We have done that over and over each month, always capping our risk. No infinite risk. The great part is we continue to lower our investment month in and month out, cycle after cycle. If we were to liquidate our trade now, we'd walk away with a total profit of $956 on a total investment of $6,380 for a return on investment of 15%. But we're not going to do that. Our current return on risk is... Let me explain. After all our cycles, our current instant dividend is $1.22 per share. That reduces our cost basis to $15.38. However, our risk is capped at $16 with our put insurance. You see, we have a risk-free trade. Isn't that amazing? We can just continue to let this trade run on and on and on, and we'll just earn income every cycle, no matter what the market is doing. A return like that isn't abnormal. We've also had trades like a 43% return on the index in 75 days when the stock traded up, a 9% return on Guess Jeans in 31 days when the stock treaded water, and a 2% return on Bloomin' Brands in 59 days when the stock dumped. Our goal is to hit a 6% return per month. If you can hit that target, every $1,000 in your portfolio becomes $2,012 in 12 months. It would potentially be $4,048 in 2 years. After 5, it's $32,987. And after 10, you'd be looking at $1,088,187. Now, here are 5 major points I want you to walk away with today. Number 1, buying options is typically a sucker's bet right now. Leveraging your money without a high confidence on where a pattern will go is a sure recipe for losses. However, number 2, you can generate a serious, and I'm talking serious, income by selling options, specifically selling the options premium. And number 3, you can, especially right now, insure your position for up to 20 times the return on risk. Number 4, we're hunting for trades with a sniper rifle. Before we put a money into any investment, we have it all analyzed out. We're not using a shotgun probabilities approach. We have it thought out in every detail before we take any one of our precious dollars and put it into the investments. Now, the last piece I want to emphasize for you is it is impossible, really, in my opinion, to screen these opportunities by hand. You see, there are so many candidates of indexes, exchange-traded funds, and stocks, and the options on them are innumerable. And you're looking for premium, and you're looking for patterns. There are not enough hours in the day to be able to screen for these options. Now, you can definitely set up screeners in your own options analysis or stock screening programs or whatever, but if you've got one tailored specifically for looking for these candidates, that is a godsend. So let me ask you something. How would you like to never miss a pick, minimize the amount of time you spend away from your loved ones, and have support whenever you need it? In fact, this is what it's all about. Saving time, creating clarity, and most importantly, getting frickin' amazing results. And I'm talking cash money. Would it be okay if I take a couple of moments to tell you a little bit about my materials, my training, and most importantly, the screener tool to see if they're all right for you? Thank you. Let me start off by answering the question of who is this for? It's someone who doesn't want to pay for multiple data subscription. They want everything they need in one place. They don't want to miss any opportunities. They want to spend more time doing other things. They don't want to do this alone, and they want the step-by-step instructions to pull off these investments. They want this is someone who wants to get consistent, reliable results. Let me give you an explanation of especially the screener and the tutorials. It's an app I've developed that automates 99% of the screening work. Every night after markets close, it scans the full universe of potential trades. It looks at over 4,000 different stocks and tens of thousands of option contracts. It quickly prunes out the 3,990 plus securities that aren't worth our time. Then it serves up a list of 2 to 10 stocks that do meet our criteria. For each stock, we get all the information we need. It tells you the stocks to focus on. It tells you which call to sell for your instant dividend. It tells you which put to buy for your insurance protection. It even gives you your potential return and your maximum risk. All you have to do is click the Research tab, check for announcement landmines, confirm the trend along the support and resistance, then execute any trade with a green light. You can do the whole process in under 30 minutes per day. You'll also get our instant income calendar, online video training, and DVD. This online video training includes the intro video, the instant income calendar online tool introduction. Video number 1, A.J. Brown researches a covered call. Video number 2, A.J. Brown executes a covered call. Video number 3, A.J. Brown reveals the results of his covered call strategy. Video number 4, A.J. Brown reveals how he transformed a 4% return on investment into a double-digit return. Video number 5, how A.J. milked an amazing 44% return on investment out of a mediocre trade. This is something I haven't even told you about yet. It's a method for getting into trades for a tiny fraction of the cost. This spikes your return on investment by 3 times, 6 times, or even more. You'll also use it to dramatically increase your profits on each trade. Most covered call traders don't know how this strategy works. Video number 6, how AJ has pushed the return on investment on his covered call to more than 50%. The video Q&A number 1, AJ Brown answers questions about the instant income calendar and covered calls. Video Q&A number 2, AJ Brown and Paulie Sable answer questions about the instant income calendar. Case study, how Paulie Sable used the instant income calendar to make up to 23% per month. Let me take a moment and share with you some others' experience. Charlene wrote me an email at 2:10 in the morning. She wanted to take this opportunity to tell her story about how she used the instant income calendar tool. She wrote, I've been a teacher for 29 years. She got sick. Now let me stop right here. I know Charlene. She got cancer. She was ordered out of the classroom with 13 years left to work to qualify for full retirement. The chemo just got too much for her. She couldn't teach anymore. She thought she was going to die, and she was actually peaceful about it, but then she had a miraculous recovery. Now, you would think a miraculous recovery should make you jump for joy, right? Well, not for Charlene, because now she wasn't going to die. She was faced with medical bills and no job. I had no livable retirement coming in, let alone not being able to collect for 10 years. I got interested in the stock market, and the rest is history. Thanks to AJ, I will not only make a living, I'll be able to travel. What can be better than that? The Instant Income Calendar Screener tool is very easy to use. All you do is read a daily table. Find a stock you're interested in, follow the strategy set out for you. She uses this along with other strategies to diversify her financial plan. She recently made 14% with this strategy by spending just over 15 minutes reading about a company, following the chart, and then waiting for expiration. See, it's that easy. Let me just hit some of the other parts of the program. You get to be part of a once-a-month live training webinar. Now, this is the Tuesday after the third Friday of the month. How many with the show of hands know the significance of the third Friday of every month? Good. Some of you do. Let me put your hands down. How many with the show of hands do not know the significance of the third Friday of the month? Folks, the third Friday of the month is when option premium expires. If you're investing in option premium, it's the third Friday of the month you get a payday. Now, if you're doing weeklies, well, of course, you get paid every Friday. But we do our webinar after monthly options expire. This is where I go over what's timely, but also what is something you can carry along in your investing forever. And so we've got all of these webinars we've ever done stored for replay. In fact, they become available within 48 hours of doing the webinar, but all of the previous ones, it's a veritable encyclopedia of information found in the web portal for our program participants. And we have a once-a-week workshop. This is where we take a ticker that is most asked for. So we open up the Q&A. We say, give us the ticker you're most interested in having worked up. And we work it up. Repetition is king for mastering how to invest in the selling premium. And in fact, we took one of them. We took a little divergence, and instead of working on the team's candidates of the week, we showed my portfolio where I had been investing in all of the candidates that were contributed to by the program participants over the previous Thursdays to show what type of returns I was getting. It's pretty amazing. But every Thursday, you want to bring a candidate and have us work it out? We will. That's what happens. It's the Q&A time. It's weekly. And we have a private messaging center where I and a few chosen traders will answer your questions in real time. You can ask your questions at any time of the night. We get it. No spam filters. It comes through our private session, our private system for us to answer for you. One bonus that we are offering just today to you folks is a strategy session with one of my coaches. So you be part of the program. My coaches are about 2 weeks behind right now, but they're calling those folks who are asking for it, and you're going to get it without any cost. It's thrown in because you're here today. See, you know where you are, or maybe you don't, but you know where you are, and you know where you want to be financially. And my coaches know the fastest way to get from point A to point B. And so they will sit down with you and make sure you're on that path. This is complimentary for being part of today's session. How many with show of hands think that's a great idea? Yeah, that's pretty amazing. Now, I have a guarantee. It's called a double your money back guarantee. You're going to make money, or I'm going to give you double your money back. You need to be confident in me, in the screener, in the system. So try the program for at least a full 6 months. If you're not turning a profit after applying that system, just drop me a line. Not only will I refund the money you invest in the program, I'll give you twice what you paid to get into the program. Double your money back. Of course, you have to show me that you did the money program exactly as I laid out, because we don't want any mavericks here. If you're like doing crazy stuff, you can't, obviously you're not doing it. But if you fail to turn a profit using this program, I'll give you your double the money that you invested in it back. It's as simple as that, and you get to keep that DVD complimentary as a gift from me. So it doesn't get better than that. There's no risk on the table. At this point, you're probably chomping at the bit. You want to know how to be part of this program. What you have to do is go right now. You have to go to optioninvesting.org/candlestick forum. Or if you're like me and you want the easier to type in version, optioninvesting.org/CSF. They both go to the same place no matter which web address you use. I want you to go now. I don't want you to pass go. I don't want you to collect $200. I love that little Monopoly guy. The reason why I want you to do this is because I feel like you deserve it. And more importantly, your loved ones deserve it too. So go right now. What I'm going to do right now is open up a browser window. I'm going to go ahead and type that in. We set this web address up this morning. I just want to make sure, optioninvesting.org/CSF. Now, what you're going to find here is the Instant Income Calendar logo. And then as you scroll down, you're going to have a welcome message from yours truly. If you'd like to check out some testimonials, they're right here in the right-hand navigation. Here is an explanation of a portfolio trading. And as you scroll down, here comes an explanation about exactly what you get. And then here's the price. The price is $497 for 6 months of unlimited access. There is no other payments. There's no recurring billing. There's nothing like that. This is the price for 6 months. It's a special deal for us here at the Candlestick Forum. In fact, the traditional price is about twice this amount. So this is today's deal. And remember, if you haven't paid money, that's what we say right here, in 6 months, not only will I refund your initial payment of $497, I will give you an additional $497. I'll literally pay you that amount out of my pocket. It's double your money back. And we do have a limit right now. We're looking for 100 traders to give access. Then we have to close the doors and get those traders fully trained and working with the program before we can open the doors again. So this limit is set. So I definitely suggest that you come over here and take care of this. Please go to this website right now. Listen, my grandmother used to say something that was really, really good, God rest her soul. It was really significant, and that was, she always used to say, AJ, the world needs ditch diggers too. Now, are you going to do that, or are you going to get off your rusty dusty and jump in, join our program, get involved? This is something you can do with very little time out of your evening or even out of your whole month. So go there. Check it out. Remember, the risk is on me with that double your money back guarantee. Learn how to do this. All right. Let me answer some of the questions that Coach Jay has been passing to me. How much do you need in an investment portfolio? Do you need to begin option trading? The answer is I've seen people start with as little as $500. But it's when you get up to the $1,000, $2,000, or $5,000 range that it really becomes something to build on itself quickly. There's a lot of opportunities up there. When you're down at the $500 range, you wind up being very selective on what you can use. But absolutely, I prefer to do the monthlies. You can also do weeklies, which give you a whole nother layer of how fast you can build things up. I think $5,000 is a good place to start, but like I said, I've seen people start with as little as $500. The one thing about being the disciplined, lazy trader that I am is if you're looking at monthly versus weekly, the weekly does require a little bit more effort. And there also is a liquidity issue. So if you're dealing with a portfolio like I have that's 6-7 figures, the monthly options are always there for you with that extra liquidity. But remember, weekly options are available, and this program works with those weekly options. And here's the next question. When you're selling premium, aren't you having to take some sort of margin? No. Out of those 4 strategies that we presented today, the covered call writing, the covered put writing, the covered call writing on leaps, the covered put writing on leaps, otherwise known as diagonal call and diagonal put debit spreads, only the covered put writing, because you must short an underlying security to get it started, requires a margin account. So let me tell you, that's actually a very exciting discussion, because every single one of these strategies in one variation or another, it can actually be done in a retirement account. I haven't found a retirement account to date that allows you to do anything with margin. But all of these trades can be converted to cash trades. Most of them are cash trades right in the beginning. But if you had a Roth or an RRSP that is tax-free, not tax-deferred, but having your money grow tax-free. In fact, we even have a little sub-program as part of this program to help you learn how to put your money into a Roth and even use it before the date of your retirement. But I'm getting off on a tangent. You can keep your money in some sort of mutual fund. You can put it into a CD. But when you simply sell the premium, you're going to be making money on your money much quicker. And now's the time to do it. The market is in a sideways choppy. It's the most beautiful time for selling premium. Please go right now to optioninvesting.org/CSF. optioninvesting.org/CSF. Listen, We don't focus on any other of the premium selling strategies in this program. Someone just asked that question. And the reason is these 4 are the easiest to leg into, in my humble opinion. And when you leg into these transactions, and we go over this in our program, you wind up tripling, if not quadrupling your returns and reducing your risk by that much as well. So it's all about covered calls, covered puts, writing covered calls on leaps, diagonal call debit spreads, and writing covered puts on leaps as well, diagonal debit spreads. All of this is covered in our program. Whew, team, it looks like I'm at the end of my time. Like I said, please go to optioninvesting.org/CSF. Go right now, check it out. The risk is all on me, and enjoy. Please have a good rest of your day. Take care.